Hey, good morning everyone. We're going to do a instructional video on how to apply the JATS PT to the charts, the oscillator, as well as the lines, and how to set those up and customize them. So right click your chart, go to indicators, and then from the JATS folder at the top, JATS indicators folder, you're going to see it says PT2, PT2 HTF, and PT3. So we're going to use PT2, and I'm going to reset my template. You can save it as a template file. So I'm going to reset it so that you can see what it looks like when you apply it to your chart for the first time. So it's going to put this bottom oscillator down on the bottom. You can see I have a daily bar, and I didn't change any of the settings. I just put it on the chart and hit OK. And this is going to give you a 1, 2, 3. Ones are blues, twos are the green in the middle, and threes are the dark green. So between 2 and 3, the dark green. Um, you can see over here 22.25 points, 44.75 points, and 62.25 points. That's for the normal distribution. And you can customize this, and what I have done is I have changed the way I prefer to see it and saved it as a template so I can load my template. Um, and I just call it 3 lines. And I've color coded it a little bit differently. White for 1, blue for 2, and orange for 3. So I can be consistent on all my videos so that when you see one of my charts, you'll see that there's 1, 2, and 3 clearly. And this structure helps me see which way the volatility is going more easily, and I can add then another instance of this on top of it. So if I put another PT2, and then I have a template for yellow line 1, this puts a it'll be whatever your chart is. So if it's a daily chart, you'll get a daily candle. If it's a 5-minute chart, you'll get a 5-minute candle. And this puts a yellow line of the PT3 only, not the 2 or the 1, and I've changed it to a 1 period. So that means the current bar volatility. I'm going to uncheck the auto scale so it doesn't crush it. And I'm going to apply instead of a new panel, I'm going to apply it to the bottom oscillator, so panel 2. So this puts the 1 period on top of the other distribution. Now the 1 period on top of the 14. Now I'm going to put this back on a line instead of a bar so it's easier to see. So you can just change it from bar to line. And I'm going to right click and expand this out, maximize it so we can see that this went up pretty far. These are maximum excursions for the 1 period range. So you can see it broke 200, almost went to 250, not quite, 220, 230. A huge 1-day move. and positive volatility. So this is just telling you that the range expanded, and it's not, you know, it's direction agnostic. You have to see your chart to see whether the vol went, where the price went up or down. So I'm going to restore this, and we can bring this back down and squish it just a little bit more so you can see it. We can start working on the upper panel. So we can put our chart indicators on top. So to put the PT3 on the chart, right click, go back to indicators, and we're going to go to the PT3 folder. Okay, and you can see that I have a daily time period. So if I can change this to 30 days to see, what the monthly distribution looks like. That's a calendar days, use higher time frame values, and click apply. You're going to see that I have my 1, 2, 3 lines in the colors that we've established, orange, blue, and white. And I will give you a template of this. So if you're new and need, daily chart templates set up, I can give you some starter templates to help you get started. But you can see that we are inside the 30-day distribution, inside the 30-day ones. And why is that important? Because if you know your bell curve, you know that the dealer's risk is delta neutral inside this area. And they're they don't care where it is inside of here. If they're selling the premium above it and below it, that's the cheap risk. If they break the 1, they'll move their risk to the 2. You see that? You see that? Yep. Or they'll move it to the 3 if the 2 breaks. You see that over here on the left? So this is a 30-day distribution. You can add another instance of it to the chart because the 30-day has an open and a close, right? So it opens and then it closes, and they're nowhere near each other. So we can give you both ways. And I'll have to tell you a secret. All of the indicators that you subscribe to will calculate on the close. I think we're the only one, or one of the only ones, very, very few, will give you the ability to calculate on the open. You see, sometimes the difference is non-existent, like this current period, but other times it's wide apart. And it really makes a difference. It absolutely makes a difference. That was August. So, for instance, on this November, it first came in and bounced off the 30-day close, but then came back to retest and went to the open. You see that? Yeah. So, so that's the 30-day. But we can also add a distribution for the monthly. And the monthly is the trading days in the month. All right, so we can add another indicator, but instead of day, we'll put it to month. So we just add another instance of PT3 over here, and say OK. All right. And that adds the monthly. And now it starts filling in, and you can see where the market is trading to. A lot of the times, they trade to both the monthly and the 30-day levels. Very, very much. So that's the monthly open. And I can do the same thing. I can come back and add a monthly close. So I've got a template set up for calendar days, and I'll just change this to month. I don't need the fibs for this because the higher time frames usually don't get into the fibs. I see this one did down here. But so here was the monthly close. So now I've got monthly and daily. So you see how this works out? Isn't this a nice template to have? And that's just the monthly, that we haven't done the weekly or the quarterly. And this gives you, if you like to sell premium, some good ideas of where to put the risk. This, again, this August, that was a total anomaly because they normally don't break these distributions. That was the Bank of Japan when they did that carry trade thing. That was bizarre. They changed their minds, got called out for what they did. They waited until the bar had gotten, do you see this? At the daily three when they announced it. Look at that. That was their chicken shit. They were trying to do that on purpose. I should keep my mouth shut, but I can see where they did it. They can't fool me. They can't make that announcement when the market is sitting on the monthly threes. They did that on purpose. Okay. All right. So there's another way to slice this data up too. How many weeks are in a month? 4 weeks. So you could actually come back in here and add yet another instance of this indicator, and instead of 30 days or 1 month, you could come in here and say I want 4 weeks. Oops. Okay, and that'll give you the last view of this, of possibilities of what they might be trying to do as far as um, putting their risk on the line. And so, yeah, let me put one more of the 4 week on the close. And we can, you can just sit here, and if you like trading, monthly options or 30 or 45 days out, you can change this, to 6 weeks or, 7 weeks. Let me change this to, hang on one second. Put this on calendar days. I'll tell you what a good one is the 12 week on the quarterly. That actually has some really good lines on it that they use, that I have found get used. All right, so there's the close on the 4 weeks. So there is a comprehensive inside view of this, and it may look real busy to you, like it's too many lines, but once you start understanding the framework, you can get a gist of why the market goes to where it goes and the targets that they're trading to. And then lean on that, especially like right here when it broke this 6120 level. I had been watching that, and it went all the way down to this lower level, and then it went to our 3 right there, 5863. but I wanted to show you the quarterly distribution. So this is a monthly. Let me rename it. So you can right click your tab, duplicate a new tab right next to it, and that'll duplicate all the settings. And if you wanted to save any one of these, settings in a chart, you can go to the indicator properties again that you created a template for, and you can click on template and save and name it whatever you want to name it. I save a lot of templates. But for this, I'll just go in to my settings and change them to 90 days. And I'm going to take everything off except for the 90-day open and the 90-day close. And show you, well, hang on one second. I'll do the monthlies too. So put month 3, and this next one, month 3. And for these 12 weeks, I'm going to hide it for just a minute. I'm going to undo the visible. There we go. So you can see this 90-day distribution was right in the middle. That's where they tapped their trade and took off from. And why do they do that? Because that's where they make the most money. The market makers will start their spreads in the middle of the range. They sell the at the money implied volatility, and they sell the middle of the historical volatility as well. Sell premium because they can make the most from the middle. All right. So, so we're going back up. We only have until December 30th, right? Or 31st. It's 31st, which is a Tuesday. And I don't think that we'll break above 6111, 6112. I know it's the Santa rally, but they have already moved risk inside the quarterly ones. So their spreads are operating. Unless they had used the median for their risk, and the risk was already moved out because it broke it up here, and then they did this for the pullback. If they do break it, the 6112, then this is going to be extremely bullish going into the year end. But otherwise, I would expect it to stop at 6110 because they use even numbers. But I'm going to go now and put the 12-week on the chart so we can see it and see if that gives us any more ideas of where their ones might be, because maybe we have a higher 12-week one, and we do. So the 12-week one actually goes up to 6150. So we could actually go from 6112 to 6150. Do you see what I did? I just extended my range because it's the same time and price, but now I've just sliced and diced it a different way. So we can actually go from 61.10 to 61.50 without them violating their um, risk, keeping their spread intact. So 61.50 for year end. And if you like a template, you can right click your chart and just save the whole thing. So the whole template structure, and call it something. Once you get all your indicators on the chart the way you want them, you can just save your whole chart template, so the next time you come in, you can right click and just open that chart template that you saved, and it will put everything on there again. So name this quarterly. I'm gonna, you can come down here and put the instrument full, and then that will give you the instrument and the month. Oops. There we go. And then down here it says ES 0325 quarterly. So that is for the daily time frame, and this daily range is important. I use the 2225 for my risk for my lower time frame. So let's set up an intraday range now, and I'll show you how that works. So let me put up a 15 or 5-minute chart. I'll show you my default template and give you some ideas about how you can build your own. But I use the volume profile on my margin, and I have, look at this, it went right up to the end of the range, the max range, 3 times the range, the daily range. So you can extend your threes out. So it goes 1, 2, 3 with these fibs, and 25, 50, 75, and 1 will get you 1.5, 2, 2.5, and 3 times the range going out. So you can also extend your fibs from either the PT1, the 2, or the 3. And like I said, you can change whether you're calculating from the session open or the prior close. And you can change your period, 20 period, 14 period, 50 period, whatever you would like. 14 is the median. And so when I add all of the PT1, 2s, and 3s on the chart, this is my, I have a daily open and close, and then I have a 5 hour, 300-minute, and I use, those hedges also. So, oh, actually, sorry, this was 2 times the range. 2.5, 3 times the range is up at the top. Apologies. That was 2 times. So here's the 1 time the range. That's the PT3. And then it went to 1.5, these beige lines. 2 times the white. two and a half the beige up here, and then three times the upper white. So this thicker line here actually was the three times of the 5 hour. And here was your 5 hour range, 5 hour 1. But that was your 5 hour 3, and then your daily 2. And then it rolled over and went right back to the daily 3 and that 5 hour bottom 5 hour 1. And then here was your other daily 3, close and open. So it traded between the close and the open of the 3. It's very algorithmic. But I love having if you have a lifetime license, you get this um, volume profile, and I just set mine up in that right margin. It's a composite, and I just go one day back. You could put a week on there also, a weekly composite if you like. But I use a daily 24/7 and a daily RTH setting. And that gives me these multiple distributions between the 24/7 and the RTH session. But if you trade with the volume and the distribution, then you could come in, and anytime that your 5 minute one period is breaking above the 5 minute 14 period, you can see that's a period of more outside, big bar range. Here it broke out and then came all the way back in, but um, trading these slopes of the one, trading that one upslope as it's moving, will get you range expansion. You just have to have the direction right, and sometimes you get the expansion up and down on the same bar, especially if you're trading a 5 minute bar. It's very noisy. I think it's much easier to trade these markets on a higher time frame, a 15 minute or a 30 minute, where you can stay behind the trade easier once it gets going. But you can see down here we went right to our um, one time fib below the 3, so that's 1.25 or 1.5 times the range. Sorry, it's 1.5 times. So I measure from mean to 3. So when I say one time the range, it's going from mean to 3. That's one time. And so going from mean to 3 to this beige line, that's 1.5. And the white line below it is 2 times. So this mean to the white line is the same distance as the mean to the pink line. So that's 2 times the range. And then below it would be 2.5 and 3 times the range. So there's 2, 2.5, 3. And this is your 5 hour range. So you could see your 5 hour range was lower than the daily, and that normally would have led you to continue going down. The path was short. But then we got the news, the PCE news, and it flipped it back up with that reduction in inflationary pricing. And then, of course, the government shutdown was averted. So I think they saved Christmas, and we can see that year end rally and where it goes. I think it's going to be 6150, right? And if it's above 6150, then it's going to be very bullish very quickly because they will be participating probably up here. All right. If you're new to NinjaTrader, you can change your chart properties right here, chart background. I need to go ahead and change my master settings. I just keep forgetting to do it. Um, I think I have a master slate setting or something. I need to change it to whatever this is because this it makes it easier to see. Okay. Change this. So when you get your indicator, don't be afraid of nesting them together like I'm doing. You can even go further and change the oscillator as well as the lines on the chart to a um, time range. So instead of daily, you can uncheck that and check, 8:30 to 9:30 and get your 1 hour IB. And that's interesting because that'll give you the inside track on, that first hour of trading. Or you can do 1700 to 8:30 and that's your Globex. So it's one or the other. It's either a time range or a higher time frame value. I'll put it back on daily. And this is how the algos work. They are a variance trading model since 2003, and they trade the range going from mean to 1 to 2 to 3, and then the outliers in measured moves of whatever that distribution is. So our mean to 1, 2, 3 will be different distances every day. Um, Based on the current distribution. So it's the distance between mean to 3 carried outside the range. So this is how to apply templates to your chart. Again, you can save each template property individually, or you can save the entire chart template once you get everything applied. You can put other indicators on here also. I'm sorry, I'm trying to sneeze. VWAP works really good with this also. I have my median. I have my own median line. I like to use that. You can use the min-max indicator, whatever Bollinger Band or anything like that. But just having targets to trade to. This works on an intraday time period too. So think about, you're going from lunch to 3 o'clock, right? So how about doing a chart of what the distribution is going to be like? Let me change this to none. Let me set up a chart real quick. All right. So we can set up a chart that says where will the distribution be at, from um, 1200 to 1300 or 1400 to 1500. That's 2 to 3. Chicago. Right? And then I'm going to add the oscillator to tell me how large that range is going to be for the same time frame. 1400 to 1500. So you come in and do that if you want to see that, where that hourly range is going to be at 3 o'clock and where the point range is going to be for that hour. See? And here we were at the bottom of that range, and they brought it back into the bottom of that range. So our ranges, let me change this to the, put another one on here for the close. Let me do 15, because that's, you can do it like that. There we go. Um, oh, I didn't have it. Hang on a second. I didn't change that to close. Now you see it's inside the distribution. There we go. Split the distribution now. So you can do it from the open and the close. And here's another trick. If you want to see the prior close, change this instead of 14 to 15. Do it from 13 to 14 on the close. So instead of seeing the open, then you'll get what it actually was on the close. There we go. And so they tried to send it out, whoever was, coming back in, probably thinking that they were going to bring it back to this distribution down here, or there might have been another daily level or something. But the algos know where they are, and they keep them in the range. You see what I'm saying? They don't let it get outside the range that's allocated for that time period. They kept it within 2175 points from the mean to the end. So you can get an idea of your risk amount for that particular hour, if that gives you any ideas for setting your directional risk. But I use that daily one um, in the same manner. I always want to see what that daily risk is, and here it was 22.25. So I saw, this is huge range, 21.75 for the 1 hour 3, or 22 points for the daily range. I'll go ahead and default to the 22.25 range. I guess it's a little bit bigger. And if we measure from the mean to the 3, so that open right here, you see it got overstretched. So they took the stops and then they brought it back in. So I guess you needed 1.5 risk yesterday to stay safe. You can use multipliers of it. And still just the one, the anytime you have a huge range breakout day like that, you're going to want to use a multiplier. Anytime one day is way outside the distribution, you're not going to be wanting to use a normal distribution. You're going to want to use the multiplier of it. Okay, so we can figure all that out. And then I have market analyzers so that I can help you visualize what the ranges are going to be on the daily, the weekly, and the monthly. I post those for you in the Moon Room. And I'll show you my points and levels moon room. So you'll get points and levels in the chat box, but then you'll also get the daily points in the folders. So you can come in and open something up and see what the day, the week, the month, and the quarter point range is supposed to be. And if you're already at the monthly three, then you're in um, tails, right? You're in extension. So it's either heading to a quarterly, the next level, like I'd be looking for a quarterly level on my chart that it's trying to reach to get that turnaround, or use a measured move of it. And definitely, just pay attention to these ranges. I give you a 1 hour period range by time frame, broken down from 7 a.m. to 8 a.m. to 3 p.m. And I give you a 14 period time hourly range, one period and 14 period. And you'll see them oscillate from both of those. I also give you cumulative ranges. So this is going like 1 day, 7 days, 20 days, you know, um, how many points are in that 20-day range. And they'll try to keep, the price inside that range. So we can do all kinds of stuff with our market analyzers. And if you would like any of these market analyzer templates, I'll be glad to share those with you as well. So, and then each folder, each day, I will post um, points and levels inside the folder. Yesterday I got real busy and didn't put the um, strikes in there, that I didn't have time. I ran out of time. I was doing other stuff in the morning. But normally I'll try to put um, support resistance levels that might get reached within our range, whether it's a daily, weekly, or monthly chart. Here was that Globex distribution. So if it's in an inside day, you want to be looking at your smaller time frames to try to get ideas of where the support resistance levels are. We can also do spreads. So I can do your daily spread and weekly. So you can see right here, we got down to that um, here 1.5 time the weekly range, and they bounced it. So we had 1.5 time weekly range and the quarterly mean, and that monthly three all sitting right there. So no wonder they bounced it. That was just a sweet level to pick off and go long from. I know some people who got in on that level, and maybe I should tell them that I think it's going to 6150, or let them figure it out. All right, get JATS GTP, JATS PT. All right, so I hope everything is helpful for you. We'll do a live stream. I also post some quick strike screenshots, so to give you a current volatility, as well as Black Scholes with the calcs on settlement, because that changes the distribution for the implied volatility. These vol to vol charts showing volume in the morning and open interest are priceless. Such good information on NQ yesterday. The 1220 distribution right here, 21,000 nailed it. The risk went all the way up there and stopped dime. So if you pull up your 1224 contract for NQ, you'll see it got just short of that and didn't breach it and came back. So putting these together with JATS GT, JATS PT is extremely helpful. Um, and especially you'll come to find out the reason that the options guys like Nick Howard that owns Bantix like JATS PT so much is because we'll give you the real volatility levels that the dealers have, and that's hidden order flow. We don't see their volume at all. And so you would have no idea that they were, leaning on one particular level or not until you see the distribution lines. And then you can put it together with the implied vol and really get some good trades. So here was that monthly three. It was a 4 week three. All right, guys, that's it. Let me know if you have any questions. It gets real easy to put them on the chart. You'll just have to get used to it. Sometimes you can go into too many lines so that you get lost. Maybe you would like just to have, one set of lines and not the others. So you could certainly minimize everything that you're seeing to make it easier to understand it. I put the settlement and the current day open on the chart as your bull bear at the money line. And, when you're going above it, you're trying to go from 1 to 2 to 3 and then your extensions. So that is it in a nutshell. And knowing which distribution to use often comes down to just the daily one on the open or close. All right, it's a daily one open. And you'll see how often they do use that. This extended beyond the third three yesterday. So if we want to add another indicator to get an extra fib on that, I can do daily one and then extend those lower fibs to 125, 150, 175, and 2. And that extends that down then for more levels. And even with that, we need more. It kept going. Um, let's see if it got the close. Oh, wrong one. No, yeah, it's even more. I mean, it was just a blowout day. So, but you can stack up your levels, nest and keep going. But normally, I mean that is just a one or two time a year thing. Normally, everything is inside the distribution, and you can start relying on the levels to stay true to the distribution. All right, guys, thank you so much. Let me know if you have any questions about loading the indicator and how to apply it to the chart, and then we'll do a separate video to show you about the market analyzers. Talk to you later.